When you're putting your own money into your business, that's not income. That's a contribution, okay? It's going to show up as a deposit right along with other deposits. So when you bring your bank statements to a CPA for them to do your taxes, 12 months of bank statements, because that's what they're going to ask you for, they're not going to know. Some of them won't care that money was your money, especially the tax preparer offices. The knowledge in this area is not as advanced, so they're just going to add up all your deposits for 12 months and then here's your total. And this is why a lot of times people walk out of these offices with tax bills and they're confused, scratching their head like, huh? What do you mean I have a tax bill? Like, how do I owe? How do I owe this much? Because you've been paying taxes on your own money because it all got lumped together. You're listening to The Money Doctor Show, where we talk about all things money for the modern entrepreneur. I'm your host and founder, Mildred Dillon, CPA. As a modern entrepreneur, you're not just getting up and going to sit behind a desk all day. Chances are you're probably driving right now with your phone in your hand, mapping your way to your next destination. Because you work online and your systems are mobile, you can work from anywhere. Not key punching, but scrolling through social media, creating your own posts to tell the world about your offerings and changing our futures and the world around us, one client at a time. Wow, that sounds like a lot, and it is, but we wouldn't have it any other way. And if this describes you, you're going to love what you hear on this podcast, because each and every episode is designed to give you a tip or strategy that you can use on one of those apps to get your finances in order, in good health, all while on the go. Ready to get to work? Let's go. Okay, this is Money Talk for Modern Entrepreneurs podcast, and we emphasize the modern for a reason. If you're someone who you're probably holding your phone right now, or it's nearby, you're probably a modern entrepreneur. You spend most of your time on your phone if you were to track it versus a laptop or a desktop. And you probably spend a lot of time moving around, maybe not driving from location to location, but you could be working from home, so you're multitasking. You've got the kids involved. That's why we splash, the family finance message in here as well for family businesses. It's a big deal. All of that, those are modern entrepreneurs. Now, that doesn't mean if you're sitting at a desk, you don't have a family and they don't help out at times, because we know that's probably reality if it's a family business. What we're talking about here, though, are ways to use technology and apps. All of the advantages that we have now, even with AI, I've been sampling some of that, and it's pretty powerful. I'm still a little nervous, but I'm venturing out. All of that to help us be these busy, multitasking business owners that we are. So we are wrapping up our summer family finance. I'm so glad we were able to squeeze in that episode. If you missed it, just one episode back, and we are heading into the first of our extensions that are due. And I know I talk about this every year, but I want to go a little deeper into what types of returns you should be filing, number one, and the differences. Money Doctor, just in general, that's my baby, so to speak, 17 plus years and counting now. It's designed for the entrepreneur, the personal finance also. If you're a new business, you probably heard that you need a CPA. And if you've experienced this, raise your hand out there. When you first start out, a lot of them don't want to work with you because you're not big enough. Literally, some of them say that, which I just think is, I hate that. But, they're expensive. I say we're expensive because I am a CPA. So I was doing that before I started Money Doctor, and that's why I know where the holes are. They're not going to get into the weeds and talk to you about the specifics in most cases of your money. Definitely not month to month, year round. They just want what they need to get the taxes done. The whole idea with CPAs in our industry is taxes, taxes, taxes. And with me having a real estate background as my side hustle, before I was a CPA and literally tapping into my accounting degree, I've got a lot of personality that I had to do something with. And so that's ultimately how Money Doctor came about. But, I was out in the field. I was going to my clients' offices. I used to meet them at the houses. Now we're going to meet at the office. So I have been mobile most of my career just to A, make it work, but, B, keep it interesting and enjoyable and oh, so fulfilling. And I'll tell you, I remember these early days with the lab coat, stepping out there and, people wondering what Money Doctor was, me included. I just knew that I was given something and I was given the day by day, step by step, and I walked it out. And you just heard, obviously I was onto something. But I'll tell you, the taxes weren't being filed, the sales taxes, the property taxes. They had, sales and use taxes in some cases, all the, personal property taxes, all these notices sitting on their desk, even payroll taxes, because they weren't paying the CPA for payroll. They were doing it in-house. QuickBooks has been around for a while, so that was your main one back then. It was interesting to show up there, and they needed help with all that. And because I had that knowledge, I was able to help. Same thing with insurance. I've had my insurance licenses longer than I've been a CPA. So you just heard the math on that. Same thing. That's a big area of a small business. Having that balance sheet match your declaration page. What is she talking about? Go find it. We'll talk about that in another episode. But basically, your declaration page is the one page that has all the big numbers on it. Basically, your coverages, you'll see that there. So just go take a look at it. It's so not rocket science. But where do they teach this, right? So your declaration page is also going to talk about property, personal property, contents, coverage. So I would see a lot of times deck pages that I know they didn't even have a balance sheet that showed they had these assets. And I was sitting on them, the chairs, sitting at the desk. So I knew they had assets, but their financials didn't reflect it. See what's going on? So I was thrilled, and I still am, to find all these opportunities where Money Doctor works hand in hand with your CPA. And look, I tell people they're going to love what we're doing because we're going to give them cleaned up financials. They're not going to have to ask as many questions. They tend to be very, very backed up with taxes, or always, down to the wire, or just so much work. They're going to love the fact they're not going to have to go back and forth with you about what's this number and how do you explain this. And we're going to have it if you work with us. So back to the difference, the CPA versus Money Doctor difference. And this matters now because a lot of times CPAs are going to ignore the personal. And I think that's the point I was trying to get to. They're going to ignore the personal side of your life. Just, not because they're bad people, but just by design. Typically, you're going to need a CPA if you're a business or a very high earning individual who's doing some pretty advanced tax planning and needs our expertise for that. But most individuals will never see a CPA, never talk to one, never care. I hate to say it, and vice versa. So when you start out as an entrepreneur, we know you're the business. Your money typically is what's funding the business. You're self-funding, bootstrapping, as they call it. Other fancy names. So talk about Money Doctor and why we do so much teaching and training. And literally I have a whole course on this, which is only 60 minutes. But I'm educating you on what to do with your personal money. When you put it into your business, make that deposit, you're going to know before we would, when you see it, go through the software, see it on the bank statement. That's why we're believers in do it yourself. That part you can do because you know what it is. Versus we're going to see it at the end of the month, or if we're working with you quarterly, or even worse, yearly, which if we're not involved in your business all year long. And so we don't want it to go too far and we don't know what's going on. But the point is, we like you to do it so you can not put it as income or revenue. You find the accounts section that's called owner draw. In this case, owner contribution, because you're contributing it. That keeps it out of the revenue, out of the income, out of the sales. All those are the same thing. Money coming in that you pay tax on, the net after you take your expenses. We don't want it to end up there. We want it to end up as a contribution. Then guess what else is happening? You're now getting credit on the equity side for putting money into your own business. Now, if it's two people, this is so important, because that leads me, I know it was a long way around, to this first extension coming due, partnerships. Hopefully someone filed that extension for your partnership, because if not, penalty notices will be arriving even after you filed. I know that's bad news. I hate to be the bearer of bad news, but I don't bring you the bad news without telling you how to fix it. We need to file ASAP, definitely by the deadline, because you failure to file. That's what that penalty is called, failure to file. The extension gives you 6 additional months. Now you see why the extension in our world is such a big deal. Look, just take the extension, take the pressure off, but now the pressure's on. We got to file. And partnerships is that first extension that's coming due. So back to what I was saying a few minutes ago. You've got now 2 people putting money into the business. That automatically makes you a partnership. Now, you could be an LLC, but you're still a partnership for tax purposes, especially if you told the IRS that when you got your EIN or tax ID number. If you told them 2 people, you're going to be a partnership, go back and find that letter. They're going to be telling you, that letter that has your number on it, it's going to say in the middle of it what type of return you need to file. And that's why when we take on new clients, we need to see that just as proof. You would be surprised the number of people who file incorrectly. And again, tax offices, they're just going to copy off the paper of whoever did it before them, even if it was them. They're going to keep doing the same thing. And we've seen that where people thought they were this and they really were that. So that letter will always let us know. 2 people, your partnership. That's the first of the returns that are due back in March, and now the extension is due. And that matters, because now you got 2 people, 2 households, 2 families being affected by this business, putting money into one entity. That's why the one return gets filed first, and now you square up inside that return. Okay, this person has this much basis as the partner, this other person has this much basis, and you roll that forward from year to year. This person took out this much, this person didn't take out this much for different reasons. So that one return takes care of all of that, explaining you got to do. And you end up with what's called a K1, 1 page. That 1 page then affects both of the partners' 1040 returns. That return, by the way, is the one that's due in October. But I want to focus on this first one. There's this big thing in CPA land, automatically making new businesses S corporations. I see it a lot. Yes, the S Corp doesn't pay tax. That's why they do it. So you don't have what's called double taxation. Just make yourself an S Corp. But why be a corp at all? Why be a corporation? Start small. Look, we're feeling our way through this. We're not even sure the future of this. Hopefully we plan on making it, but you'd be surprised. Again, most businesses evolve. I can tell you, Money Doctor today looks very different than Money Doctor did years ago. It has evolved. Our messaging has evolved. Who we serve, look, how we serve you has evolved. I do like an LLC versus nothing. Okay, just your name. But you can do business as your name. You can get a DBA even if you want a fancy name. You can do these things without having 2 returns to file every year. But guess what else? You got to get on payroll now. Now you got to do a payroll returns, which are due quarterly. Sounds like more money to a certain someone. You've got payroll taxes that you have to submit at least monthly, but I got clients twice a month. That's how much payroll is coming through their business. So this is a lot of extra work for you, but revenue for whoever's helping you, right? So I'm going to leave that alone. I think you got the message. Again, start small. It's okay to be an owner draw to take your paycheck out when you're just starting out. But back to that, when you take that out, that's not an expense. You can't write that off. I see it a lot. I'll talk more about it when we get to the personal returns, because that's where your owner draw situation is typically going to show up, not for this upcoming return. S Corp, you're going to be dividends, okay? Because you are a corporation. So you're going to have stock as ownership. It's so complicated. Again, for startups, it's crazy to even talk about this. But you could be a business out there that you've heard these terms and you've wondered about what I'm saying. Maybe you've been getting the notices, because I tell clients, I tell anyone, you, the taxpayer, are going to get the notice, not the tax preparer, even if it was a CPA. I'll tell you a story. It happened right before this pandemic of a client. I'd had her for years, and she was extremely DIY. She was one of these people who, even though I was in her life, I never heard from her. I'd done training when we first met years prior on the QuickBooks and how to do things, but she never would reach out and ask for help, ask questions, anything during the year. But every time I'd file her taxes, I'd find out about 2 or 3 businesses that they started. They weren't really making a lot of money. Some of them were kind of breaking even, but at least it was offsetting her husband's corporate job. So, from a tax perspective, they really weren't paying taxes, and they were getting these refunds. So the last time because I lost this client, that's why I'm telling you the story. And she had, for some reason, did something different with 2 additional businesses. She made them S Corps. When she sends me the letter, I tell her, I said, this is a corporation. You should have filed a corporate return for those. Those were due months ago. Well, I didn't know. And sure enough, she gets the penalty for months that had passed, 6 months, $200-ish a month. And she's very upset about that at me. And I remember that feeling to myself. I said, here's a person that even though all year long I reached out to her, because I'd reach, hey, just let me know if you need anything, because I was in her area checking on other clients. Oh yeah, we good. So in the penalty notice, very nasty attitude, very nasty. So you can see all businesses and good business. And when you start dealing with these more advanced organizations, you want to have an expert. You want to be checking. You want to make sure these things are getting filed. You want to see if there's some things you need to be doing, like corporate formalities. You should be having board meetings, doing this thing that now you have said, hey, we want to be a corporation. It's a big deal. And even partnerships. Again, you've got to keep track of how much money's coming in from each person, how much money's going out, and keep all of that separate from income. So making this transition now, as I wrap up this message, what do we do about all of this? Well, first of all, if you don't know the type of business you are, the SS4 letter spells it out very clearly. But go to the IRS website. There are all these tools now, all kinds of ways to get answers now, especially if you can't get them on the phone. So check out some of those resources so you can get that question answered. Okay, so that was a lot. I feel like I talked nonstop. So I'm going to end it here and just say, if you need any help with this, you know how to reach out to us.
You can find me anywhere on social media at Your Money DR on all the platforms. And you can also start a chat with us at our Facebook page, The Money Doctor, all spelled out on Facebook. Wow. Thank you so much for listening. Please subscribe to the podcast.
Share it with your family, friends, anyone who you think could use a little money motivation and maybe learn some things too. Maybe they're out there kind of Lone Ranger doing their own thing. I'm always here to help.
I just appreciate you so much. Until next time, Mildred Dillon CPA saying make it a great day, especially for your money. And we'll see you next episode.